We are working our way through the financial statements. In the last video, we prepared the statement of retained earnings. The video before that, we did an income statement. On to one of the most important financial statements, the balance sheet. Now, if were in a classroom, I'd be telling my students at this moment, okay, the income statement, the statement of retained earnings, pretty straightforward, and I would have my paper sort of normal orientation. Portrait, I think it is. And I would say, if you are worried or if you're a big writer, I would, for the balance sheet, for the first time anyway, turn it landscape. I would want the more width to work. And the first time you do it, you almost want a fresh sheet of paper. So if you're working along with me, pen to paper, I hope you are, let's do the balance sheet, but it's going to be wider. So that's my warning to you. Okay, so a 3-line title. Sherry's Shuttles. We are asked to prepare a balance sheet. Now, interestingly, balance sheets do not get dated for the year end or for the month end. Balance sheets just get dated, and sometimes you see them dated as at or as of. We're just going to date it, though. So December 31st, 2029. Okay, so the balance sheet, we said, looking back over here, is the accounting equation. We list our assets, liabilities, and equity, and at the end of it, we say, do assets equal liabilities plus shareholders' equity? And we will soon find out. So let's get to it. We'll start with our assets. So I do it, again, these are all format choices, and your professor may have different format choices. This is an invisible dotted line. I'm going to erase it, so don't you write that dotted line. I do this in 2 halves. And at the top of the left half, it's all about my assets. I write the word assets all in capital letters. In the top of the right half, I write the word liabilities, all in capital letters. And somewhere down here, I write SE, shareholders' equity. I'm not sure where yet, because I don't know how long my liabilities are going to go. And the idea is the total of the left side, whatever I total to, don't write this, is going to equal the total of the right side when we get there. But we're not there yet, not by a long shot. Let's do our assets, and let me highlight them. So I'm going to undo all the highlighting and circling I've done so far, and I'm going to go through my assets. So I got buildings there as an asset, accounts receivable, office supplies, cash. Anything else? Oh, equipment. I almost missed the equipment. Okay, so we're asked to prepare a balance sheet. Now, balance sheet, when we did the income statement, we listed all those expenses. I just list them in whatever order you see them. You know, we'll get more particular as we go. The balance sheet, from the word go, I'm picky about order. And you're going to want to get good at the order. So the first thing is we list from most current to most long-term, and we distinguish between current assets and long-term assets. So let's start with our current assets. And this will be a subheading here. So under assets, I've got a subheading. This feels thick in my pen, but maybe not. Current assets. And so under current assets, I have 3 to choose from. I've got accounts receivable, I got office supplies, and I've got cash. Now I have to say, which order should I list these in? And the order of a balance sheet is called the order of liquidity. If you're from Europe and you're on IFRS, it's almost the opposite of what I'm about to tell you. But this is, North America, and this is the order you want to be listing them in. The order of liquidity, the most current to the most long-term. So of these 3, which one is the most current? And I'll tell you, always the most current of our current assets is cash. Cash is constantly moving, and liquid means cash-like. So what's the most cash-like out of these 3? Cash is the most cash-like. So let's list cash first, $25,000. So current assets, and under current assets, I have cash, $25,000. Now I'm going to have a list in total, even among my current assets, as you will soon see. So I've got list on the left, total on the right. Cash is $25,000. Out of accounts receivable and office supplies now, which one of those is more current? And the idea is liquid turns into money, gets used up. Generally speaking, cash first, accounts receivable is second. We're going to collect cash from our accounts receivable in 30 days. Our office supplies likely take longer than that to turn over, right? To go through your office supplies. Accounts receivable, 30 days or less. Office supplies might last you longer, but just having done this a long time, accounts receivable, which I allow my students to abbreviate as AR. Your professor, again, talk to them about what abbreviations they will and won't allow. They might not be so abbreviation. I'm a fan. They might not be a fan of abbreviations. The last one was office supplies, and I think it was 3. So that's it for my current assets. I need a subtotal. Total current assets. And my total current assets, 25 plus 12 plus 3, that's 40. Boom, we're done our current assets. Now let's go on to our long-term assets, which I have 2. I got buildings and equipment. So again, order here is going to matter. I need to say which of these 2 is more current. What's more current, the equipment or the building? Well, equipment lasts 8 to 10 years. Buildings last 30 to 40 years. Equipment, even though it's long-term, is much more current than a building. So I'm going to go equipment first, then buildings. All right, so I need a heading. Long-term assets. You can also, we'll see this called PPE, property, plant, and equipment. Very commonly, I just call it long-term assets. So under our, or some people call it non-current assets. That's another phrase you'll see on a balance sheet. They're all talking about the same thing. This is our long-term assets, and we said equipment comes first. And buildings, or building, I think it's building that they've called it, comes second. I forgot the amounts, so let's go back up there. Oh, it's buildings, 150. So 50 for the equipment and 100 for the buildings. 50 and 100. So the total here is 150,000. And that is my total long-term assets. All right, now we need a total, like a grand total assets. 40 plus 150 is 190. That's it. So this half, I had that dotted line at the start. This half of the balance sheet is done. We've listed our assets on the left. We're going to list our liabilities and equity on the right. And at the end of this, hopefully they match. At this moment, I start to do some formatting stuff, just my own workflow. I double underline. This is a key number in a bottom line of our balance sheet. And I also place dollar signs. And we're always going to have 3 on our balance sheet. So top, there's 2 columns here. So the top number of each column gets a dollar sign. And anything double underlined gets a dollar sign. So in my class, the asset section will have 3 and only 3, never more, never less. $3 signs. Again, that's something you're going to want to make sure you're on the same page as your professor. It's okay if they're on a different page from what I say, but this is the way I do it. Okay, let's move on to do our liabilities and equity. So let me unhighlight these. And I'll highlight liabilities next. Liabilities. We got a bank loan. We got wages. We've got accounts payable. And that's it. Okay, so we're going to distinguish between current and long-term. And within current, we want to start with the most current. In my class, the most current liability, the first one is always going to be accounts payable, and then we'll go from there. So let's start with accounts payable. Are there real world exceptions to this? Of course. But just, when you're rookies in accounting, we'll make the rule hard and fast. We'll say accounts payable in my class always comes first. And then the other one was it wages payable? I've forgotten already. I got to go back up. Accounts payable 17, wages payable 3. Okay, accounts payable 17,000, wages payable 3,000, and the total current, running out of space here. I don't think I spaced this out properly. Just looking at liabilities is 17 plus 3. Move it over a bit. 17 plus 3 is, of course, 20. All right, well, now we're on to long-term liabilities. And we just had the one. It was a bank loan payable. And the bank loan payable was for, I've already forgotten, $30,000, $30,000. So let's punch that in. Now, when we did our revenues, you'll notice we just had one revenue, so it went on the right. If we had two revenues, I would list them on the left and total to the right. Here, we just have one long-term liability, the bank loan, so I write the number here. I don't say long-term liabilities, bank loan payable 30, total 30, right? If you just have one, that is the total. You can be a bit efficient here. Now, our grand total for liabilities is 20 plus 30, it's 50. And again, just two columns, right? The left and the right. The left is when I have a list of similar, accounts. So two current liabilities, we total to the right. Long-term liabilities, because there's only one, it goes to the right. Okay, last section here, shareholders equity. And the shareholders equity, the S, the apostrophe comes after the S. We assume there are multiple shareholders. Okay, there's always going to be just two accounts here for us, especially when we're first beginning. There can be more. Common shares, this is also called common stock. There can be an account called paid in capital, these types of things, but for us it'll be common shares and retained earnings. That's it. And so our common shares were, going back up here, there they are, $30,000 common shares. And retained earnings. What are my retained earnings? Well, if I go up here, I'm going to get the wrong number. If I take this number, $80,000, and the reason this is wrong is because this is January 1st, and we're doing a December 31st balance sheet, so this is wrong. So where do I get my December 31st retained earnings? And the answer is statement of retained earnings. So it's $110,000. So 30 plus 110 is 140. And that is my total shareholders' equity. I do allow my students to abbreviate here, and particularly this next line. It's a funny line. The grand total on this side is total liabilities and shareholders' equity. So, and SE. So there it is, total liabilities and shareholders' equity. So 50 plus 140 equals 190. At this moment, if I had a baby beside me, I'd grab it, pick it up, I'd throw it in the air in celebration. I'd be so happy right now. The birds are singing. The sun is shining. You should be very pleased with yourself. I'm very pleased with myself. Even though I've done these a million times, I'm still happy when this happens. Why am I happy? Can you guess why I'm happy? I'll tell you why I'm happy. I got to the end of a big, long problem, and my balance sheet balances. Assets equals liabilities plus shareholders' equity. It happens a lot that it won't balance, and you will be frustrated. But in this one, we did it. We stuck the landing. Our balance sheet balances. Double underline that. That's a key number. I'm going to stick some dollar signs where dollar signs belong. So again, $3 signs is what we're expecting to see here. There are two columns, 1, 2. So top of each column gets a $, and anything double underline gets a $. Students always want to put $signs beside total liability. They always want to put $signs beside common shares. Some professors may want that or allow it. Not me. If you're in my class, this is the $signs I want to see. There will be 6 on every balance sheet that we do, and there we have it. We've done a beautiful job on our balance sheet. I do want to pause here and tell you a quick story, just the test writing strategy story, and it's also kind of a weird, somewhat sad story from my life. So you can skip ahead like 5 minutes if you don't want to be here for the story. But when I was a beginning student, I always wanted to be an accountant. Actually, from a young age, I always wanted to be an accountant. People would ask me when I was 4 and 5 years old, what do you want to be when you grow up? I would say accountant. I went through high school. I would tell everybody who would listen, I want to be an accountant, but I never took an accounting class. And it wasn't until my second year at university, I took an accounting class, and I was like excited, and I worked hard at this class, and we got to the first midterm, and this is why this is relevant to you. I made a terrible mistake, and I don't want you making the same mistake I made. So the professor asked a very similar question to this one, actually more like problem 1-4, but very similar to this one. You prepare an income statement, a statement of retained earnings, and a balance sheet, and that's the question, right? And they'll grade you on how well formatted it is. If you've calculated the numbers right, that's how you get your grade. And so I work through my income statement, and everything seems like it's going okay. I work through the statement of retained earnings. Yep, that's good. I work through my balance sheet, and here's where I made a mistake. I got to the end, and you guessed it, my balance sheet did not balance. And I started to stress out, and I thought to myself, oh no, I don't know everything about accounting, but I know one thing is true: assets equals liabilities plus shareholders' equity, and mine don't. Right. And so I see students, as a professor, I see students in this situation all the time where they're like, oh no, here's where my mistake came in. So obviously I made some error somewhere. I started to panic, and I did something stupid. I erased everything, and I started over. And I get through my income statement, get through my statement of retained earnings, like everything seems familiar, get through my balance sheet. It didn't balance. It was the same numbers. Like I just redid it, and everything was the same. And you've seen, like, this took us 40 minutes of video to do, but it'd take 20 minutes to do if you weren't explaining it to beginning students, right? It would take about 20 minutes to work through this. And so now I've done it twice. So I'm 40 minutes into an hour-long test. I made a terrible error then. I erased it again. Now, this is question 1. There's like a bunch of questions, and I'm still on question 1, and I've got a blank sheet of paper, and I'm doing it again. As I get to the end, I'm starting to sweat. I'm starting to cry during my midterm exam. I'm like, what is happening to me? My hands are shaking. There's tears on the paper. And so I get to the end, and it doesn't balance again. I just leave it, and then I move on and scramble and try to do the other questions. But I know, like, in my heart, I have bombed this test. And so the advice to you is, don't erase everything. Just leave it be. So just looking at this, let's just say, for whatever reason, let's see, instead of 21 here, I put 12, right? I just read the number backwards. It happens to people all the time. They put 12. So this is off by $9,000. Their total expenses is $9,000 wrong. Their net income is off by 9. Their retained earnings, therefore, because net income is off by 9, the retained earnings is off by 9. And this doesn't balance by $9,000. And it's because I said 12 instead of 21. I just got the numbers swapped in my mind. If this happened in my class, you would lose 1 mark. Your balance sheet doesn't balance, but you've lost 1 mark, and it's 12-mark question, so you got 11 out of 12. You still have an A+, right, in the course, even though your balance sheet didn't balance. So don't erase everything. Now, the other purpose of this story was just to say, like, I failed that test. I got I think it was 32% or 27%. It's a long time ago now, but I failed, and I failed miserably. It wasn't like a 49 and I was so close. It was like I bombed, and I knew it, right? And I told the professor, I said, what can you do? Can you help me out? And the professor said, no, this test happened. You just have to do better on future tests. And I got test anxiety as a result of this. Now, I barely passed my first accounting class. So the message here, though, is hopefully a hopeful one, which is one, failing a test is not the end of the world. I failed my first test. I went on and became a CPA. I became a college professor in accounting. I became a YouTuber in accounting, right? You can fail a test and still keep going. I see it all the time in my classes where students fail the first test and they get their act together and survive. I didn't get a great grade, but I did survive the class. The second thing I would say is I have students who fail classes, not just the exam, but they fail the class. And again, in the moment, to them, it feels like this is the end of the world. My life is ruined. I got to talk to my parents about this. They're, very upset, and justifiably so. But I've seen this. I've been at this gig for a long time. Students fail classes all the time, and it's not a judgment of them as a person. And I've seen them, they take the class again and they do great the second time. So if you do bomb a test, maybe that's why you're here. You stumbled into my videos because you just bombed and you need extra help, and thanks for being here. But you can do it, right? Like I've seen it 100 times in my class where a student fails the class or fails a test and they manage to get it together, right? So I appreciate that you're here. I just wanted to share that story with you. I'm sorry if it was a long story, but I think it's a story worth sharing. Okay, let's continue with the problem. So if your balance sheet doesn't balance, the big lesson here is don't worry about it. Move on. If you have time at the end of the test, come back. Don't waste time by erasing and redoing, right? That's a stupid thing to do, and I did a stupid thing, and don't you do that silly thing like I did. Okay, the final piece here. We got to calculate some ratios: current ratio, debt ratio, and equity ratio. So the current ratio, so here's the three ratios we were asked to calculate: current ratio, debt ratio, equity ratio. The current ratio is current assets divided by current liabilities. And it says, like almost you can see it pictorially here, do I have my debts covered, right? Do my assets cover my debts? Can I pay my bills? Maybe another way of putting it. So in this case, the current assets are 40. The current liabilities are 20. 40 divided by 20 is 2. I put some decimals there. Normally you'll have decimals in this one, but this one happened to work out to an even number. All right, so this means, yeah, I can cover my short-term bills, right? Current liabilities are short-term bills. Current assets are your short-term assets. Do I have enough short-term assets to pay my short-term bills? The answer is yeah, I got it covered 2 times over. Rule of thumb here, 1.5 or above, and you're safe. So yeah, I think we're safe. Debt ratio is not current, but total liabilities divided by total assets. So let's take a look here. Our total liabilities is 50, and our total assets is 190. 50 divided by 190 is 0.2631. This one is a percentage. So again, 50 divided by 190 is 0.2631 or 26.3%. Our equity ratio is the total shareholders' equity divided by total assets. Total shareholders' equity here is right here, 140. Total assets is still 190. So 140 divided by 190 0.7368, 73.7%. Now these two, you can see it adds up to 100%. It has to, because the accounting equation, how it works. The general rule of thumb here, and this one we don't know if it's good or bad. Our general rule of thumb for debt is smaller is better, or smaller is safer. A finance professor would slap my hand. They think debt is okay and certain levels are. In our class though, smaller is safer and safer is better. And that's a very rough thing to say. In this one, bigger is safer. And for us, safer is better. But we don't know if this is good or bad, because if last year the debt ratio was 10% and this year it's 20%, we'd be like, oh, we took on more debt. That's riskier and therefore less safe. But we don't know. So there we have it. We have fully solved problem 13A. If you stuck around, now we're up to 30 minutes. If you made it all 30 minutes plus the previous video was probably 20 or so, my goodness, I hope you're considering dropping a like and or a subscribe. It tells the algorithm I'm doing a good job, and I hope this is helpful to you. All right, that's it for this video. See you in the next one. Bye-bye.